Good evening, everyone. This is John Locke, and you're watching the Locke in Your Success Trade and Market Update for November 3rd, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we are not making specific trade recommendations. Also, the risk of loss in trading securities can be substantial, so please be aware of all your risks prior to placing any trades, and any trades in the presentation may or may not be live trades. In the event they are computer simulated trades, we do the best as we possibly can to make sure that they're represented as accurately as possible. Also, if you're watching this on SMB or YouTube, please come on over and visit our trading blog, lockeinyoursuccess.com. And just for an update on the updates, we are planning on moving this to a webinar format on Monday mornings sometime this month. My web developer's been sick and we've been late getting the website out. Hopefully that'll be out in the next week or two. Once it is, we're going to move these things over. There will be a link provided on the website to get on over and watch those. So just kind of look out for that. And I'll send an email out pertaining to that. So another good reason to join our mailing list so that you can follow these. We do plan on posting them still to YouTube afterwards, but they'll probably be posted late Monday or Tuesday or something like that. So we'll see how that works out. All right, let's take a look at the markets. Very interesting market movements this week. We were expecting a down move in the Russell. We actually got a weekly up move in the Dow. We got a weekly up move in the SPX. And the NASDAQ was relatively flat, slightly down for the week. However, the Russell had a significant down move for the week. And like I was saying, we had 8 straight weeks of up candles, and you don't see that very often. So it was almost a sure bet that we're going to be down something this week. And we're down a good 35 points here at the bottom, so that's a reasonable pullback for the Russell. However, none of the other indices joined in, so more indicative of people rotating out of small caps, probably back into the SPX, which is still rising for the week, and that's probably only temporary. So, what does this mean going forward? Basically what it means is that we're going into a state of confusion with the markets. So, let me come back to our daily chart here. We came right back to a 20-day moving average. Nothing substantial about that, it's just a very normal pullback. The Dow is still quite a bit over its 20-day. We're going to have to watch this resistance area here. We get a hard move up over this resistance area, it's going to be very bullish for the markets. It's probably only going to pull the Russell to its 1120 highs. So if we get the breakout here, this is kind of the thing to watch, we'll watch the 1120s on the Russell. At that point, this will probably pull back, and where it goes from there is going to determine where the market goes. I'm still not willing to move our target for the expiration close on the Dow. I still believe that we're more likely to run sideways and then down, and I think this is probably still a good target here. On the SPX, we'll have to watch this support level. This support level breaks, we could get some action down here into our previous horizontal support, 1725 area. Because we had this breakout, which I was not expecting, the SPX is stronger than expecting, I will raise this target probably sometime this week coming into expiration. I'd be surprised if we're down this low. If we are, it's going to be a nasty pullback in the Russell, but I don't think that's going to happen. I think we're more likely just to kind of hold the highs here. If we look at the NASDAQ, we're somewhat overextended here. We're due for a pullback down, at least to this trend line area or this gap, which is more likely where we're going to land. So we'll probably end up raising the SPX and NASDAQ targets slightly. The Russell target, I am thinking that we may have to lower it slightly, but I'm still thinking this possibly is a good number. It's certainly possible we'll see a small pullback in the Dow and SPX, and if that's just a small pullback, we'll probably hold these levels and run sideways right into this area for expiration. If they're a little deeper than normal, we'll probably pull back into here and then bounce. and still come out somewhere in this area, maybe slightly lower at expiration. So that's what I'm thinking there. And of course, if they stay strong, then this will probably be a good number because we'll probably come up, test these highs. And I don't think we're due to run up any higher now. I mean, this pullback kind of changed my opinion a little bit on touching this 1040, 1050 level. You never know what's going to happen in the markets, and they can surprise you at any time with news. But barring any important news, so those are my thoughts, and we'll just have to see how it turns out. All right, let's take a look at our positions. We'll start out here with the December V Condor, mainly because it's easy. There were no adjustments on the December V Condor. One of the things somebody brought up to me is, yeah, I have shorter wings to the upside than normal here. There's only 20-point wings. The reality is, when I entered this trade, the strikes were not available over our 1200 strike. That was the highest strike available. I wanted to sell the 1190, which was back here, and then buy 30 points higher, which would have been the 1220. However, those strikes were not available at the time, so the best I could do is buy my highest long, come in 20 points, and this delta was actually too high when I bought it, but I wasn't overly concerned. I was pretty sure the market was going to top out at 1140 anyway, so that wouldn't have been a terrible problem for us, and that's why we're sitting in something that's a little off here. If we have to roll it, I'll correct it. But other than that, we'll just kind of see how this plays out. Again, no adjustments for this trade at all. So let's just go to the December Bearish Butterfly. Again, we entered this with the 1100 shorts. There was no need for any adjustments this week at all. All we did is pull back. This is doing fairly well. Of course, if we get a really harsh up move, we may draw down again. But as of right now, there's been no adjustments to this for the week, or actually since it's put on, and all is good there. Let's shoot over to our November V Condor. This trade did get a small adjustment on Wednesday and an adjustment on Thursday. So if we take a look, this is what our current position looks like here. As soon as the market started pulling back on Wednesday, and I could sell these short strikes back. Remember, we had to buy 2 of these back because the market was very bullish earlier in the month, and I just sold those back off again. So if you look in the T-log, you can see on the 30th, which was Wednesday, we sold 2 of these 1150 calls back off, and then of course we started falling back into our V again. So what I ended up doing is just widening it out, because if the market continued down or kind of wanted to stall there, I was going to get into a negative theta situation. So I took our 1160 call and 1160 put and moved the put to 1060 call and 1060 put and moved it to 1020 and 1100. And this is what we have for position now. We're up about 3,300, which is about an average return for the V trade. Sometimes, like I said, we can do considerably higher. Sometimes we do a little bit worse, but this is pretty much what we've been pulling in most of the months this year. So if we continue to creep up, as long as it's not too hard, we get to 1125 or so, should be really good here. If we pull back into the center and I can pull, I may just close the trade, we'll see. And if we have a really harsh up move, it's still possible we could lose this thing, but it would be unlikely at this point. All right, so let's take a look at our November ROCK trade, which did get some action this week. This trade at the beginning of the week had our lowest butterfly at 1090, and it had our middle butterflies at 1130, and it had a couple of 1150 butterflies on. So if you look at our T-log on Wednesday, we had, let's just go into Backtrader, so we'll take a look at this. We'll take a quick look. So here's back on Tuesday. We were going along just fine. We had our 1090s, we had our 1130s, and we're scaling into our 1150s up here, and hoping the market just kind of stalled out or kind of continued to creep up. that would be the bonus, or a good, very good return this month. Or if it sat, would be very good too. So this is what we were looking at, and we started to pull back. We hit our maximum delta. We pulled off these 1150s later on Wednesday, and then as we continued to go back, we pulled. We ended up having to roll these 1090s down to 1070, and we went back into cat position. So this is what we looked like on Wednesday. If we take a look at an analyzed graph, we're here. The market continued to pull back. So per guidelines, we just pulled these 1090s off. We rolled them back to 1070. And this is what we look like as of today. If we peek up at our analyzed graph, you can see we're nice and wide. We're probably going to end up taking $4,000 or $5,000 this month, which isn't terrible. It's a lot less than we're used to getting in the rock trade, but yeah, we got kicked backwards in the trade, and that happens sometimes. So still looking good, although our targets probably aren't all that high this month. You never know; it may give us. We may be able to pull it back if the market creeps up, but we shall see. If we take a look at our T-log, this was the move on the 30th on Wednesday. We bought back the butterflies, and this was the rollback on Thursday. Yep, on Thursday. Okay, let's go to our November M3 trade, which got a couple of adjustments as well. This trade on the 29th, which was Monday, we were actually up a little bit, and I ended up buying 5 1090 1100 call verticals, and when the market started to pull back or came back on Friday and it was pulling down pretty hard, we ended up buying one 1060 butterfly earlier in the morning, and about an hour later we bought another 1060 butterfly just to keep our delta under positive 100. Turns out it wasn't really necessary because the market came back later in the day. But as of Friday at 3:30, we were positive 57 delta, and this is what our position looked like here. As of close, we were up higher. I think we were actually flat delta on this trade. We're a little bit oversized in the butterflies. We're still within our capital limits. The extra position size will come off if the market continues to go up, which it probably will. So that is what we're looking with the November M3. And the November Bearish Butterfly, which is the trade we are going over more in detail this month, hasn't had to have a whole lot done to it until recently. And if we come to Monday, this is what we look like here. We had a part of our position back at 1090. We had 10 butterflies at 1110, and we had 10 butterflies at 1130. As the market pulled back, we bought back 2 of these 1080s. Remember, we're in expiration rules now, so we're trying to keep the delta under 500 intraday and around 250 into the close. So what we ended up doing here is buying back some of these butterflies at the 1090 level. So if we take a look at our T-log, we did that on Thursday. On Wednesday. And then on Thursday, we ended up buying 5 1130 butterflies, and then, selling 5 1130 butterflies early, and then a little bit later we sold 5 more of these 1130s. So we completely scaled out of the 1130s, and now we're only in 1110s and 1090s. So if we move to Friday, you can see at 3:30 we are slightly too positive delta. However, I did not adjust this at 3:30. I waited till almost quarter of. The market actually did pull back to within limits. Actually, if we go to the end of the day, you can see we're within our limit here. We are scaled in 2/3 at 1090 and 1100. We're up a couple $1,000s. We have a flat day Monday, Tuesday. We might be able to get out of this at our low profit target 5,000. And this is what our position looks like here. Like I said, it won't take a whole lot to kick this up to 5,000. Also, it'll take us a flat day or a slightly up day that there is no impending news, so we don't have a problem with that. So that is the Bearish Butterfly, and I believe that is everything for the trades that we have on. I believe the market's in a bit of a state of confusion, and for me, I think that's good. If we can remain sideways and stay confused for a week or so, then we should be able to pull out of some of our November positions and putting the rest of our December positions on. All right, that's it for now. Everybody have a great week, and we'll update you next week. Thank you and good night.